Hi, everybody. It's Scott Riley at the Market Update Desk, Friday, January 5th. And we started out with a roller coaster. It was a crazy start to the day. We had the all important BLS Jobs report come out today, and there was a whole lot of BS within it. The big headline that everybody's talking about and that affected the market negatively right out of the gate was uh, plus 216,000 jobs created, hotter than expected, which was 170,000 jobs. So, right out of the gate, the 10-year bond went from about 3.95 all the way to 4.12, just like that. The NAS, Dow, and stock futures market tumbled until, of course, we got much deeper into the report. What did that tell us? Well, senior analyst Gibson was busy right out of the gate with his pencil, right after his morning kibbles and water, and found that magically BLS downgraded, revised October and November's jobs report by a negative 71,000 jobs. That's a tremendous revision downward. So if we take the 216,000 jobs created in December, subtract the 71,000 revision from the previous 2 months, that gives us a net jobs creation of 145,000, much lower than what the market was expecting, 170,000. So what we saw was a steady correction within the bond market and 10-year bond market and the stocks. So we saw bonds fall back from the height of 4.12 to just under 4, which is fantastic news. It stabilized once everybody got past the bogus headline number and did the actual math. When we look into the report for the sectors that created the jobs, shockingly, government led the way with 52,000 new jobs. That's a whole different discussion. And then healthcare was second, which created 38,000 jobs. Now, travel and leisure did sustain some positive numbers. So that's the segment that's been bringing us through these big job numbers for the last 18 months. Travel and leisure. So that is still positive, which is a good thing. Now, average hours worked decreased again slightly by 1/10 this month, and that is actually the one of the lowest factors in months. So we're watching that very closely. Another big one deep within the report was the labor force participation rate. That fell to the lowest level since Q1 in 2021. So the interesting dynamic we have is we're showing all these gains, but we're showing labor force participation decline. What does that tell us? There's some funny math going on within these numbers. And also, the majority of these new jobs shown within this report are part-time or multiple job holders. These are not full-time jobs being created. So that's part of this bogus report that's coming out that negatively affected the market initially. Now, the Fed futures market, based on all of the new data that came out, uh, decreased the expectation of a rate cut in March to 55% from a little over 85%. So that was a big decline in what the market was forecasting. Now, when we get into other indicators that came out today, one of them was the ISM Manufacturing PMI index. That came in at 50.6 from an expected 52.5, which showed weaker than expected. Um, now, we also did have factory orders increase by 1/10, 2.6% from an expected 2.5%. So we have a little bit of both neutral news and negative news to the markets coming in today. Now, what's frustrating with these BLS jobs numbers are these revisions do not have nearly the same impact when they come out revised is when they come out with these super hot numbers. If you remember back in October, we had a huge jobs report, scorching, and that jumped interest rates up into the 8% range. So the effects of overestimated numbers have a greater impact than the revisions to those overestimated numbers. So my suspicion is the rest of the day, we're going to be fairly steady. We made it past this number. We were hoping for less than expected on the headline. But it came in the way it is. The revisions did help us out. Now, when we look also at the household survey report of the job creation numbers, that's where these numbers come out, where all these jobs being created are part-time workers, not full-time workers. So as we go forward towards the end of the month, I think we're going to pick up a little bit of steam for mortgage rates. We did break outside the channel of the pattern of what we've been following, downward trend for 10-year bonds and the positive impact of mortgage rates, that channel that was going on. So we did get hurt a little bit on the resistance levels. The good news is we pulled back. So we're still in some pretty safe range, it appears. We'll get through the rest of the day. Looking for a great week next week. And we're watching all these numbers very, very closely. Give us a call this weekend. We'll help you get pre-approved, get an offer accepted for you. 616-293-2189. Have an awesome day.